Yeah. So, good morning to each one of you. Happy morning to each one of you. And thank you, Kajal Madam, for that introduction. So, as Kajal Madam informed us, today's topic is on IVS, International Valuation Standard. And as you all may be aware, the IVS or International Valuation Standard, this have been revised, and that will be actually made applicable mandatorily, compulsorily effective from 31st of January 2025. IVS has been published on 31st January 2024, that is few days back, but in effect, it will mandatorily or compulsorily made effective from 31st of January 2025. So if you go through that latest version of the IVS, you will find that major changes, major amendments have been made. So it is very important to actually know the amendments and prepare ourselves for the changes. So in that context, this today's webinar, I will try to give as much input as possible. So with that brief introduction, since we have a lot to cover and time is limited, just 2 hours. So what I will do, I will share my PPT. Uh, just give me a 1 minute. So I hope my PPT is visible to each one of you. If you face any issues in visibility of my PPT, please inform me. And my sincere request to each one of you, please make this session as a knowledge sharing session. We all are experienced professional and practically we learn from each other every day. So through your experience, if you intend to share any knowledge on this particular topic, you are welcome to do so anytime. And at the same time, if you have any question, any query, so you can interrupt me anytime by unmuting yourself or through the chat message, and I will try to give a reply to those query to the best of my abilities. So, overview of IVS with latest amendment, that is going to be our today's topic. So we will start with the composition of IVSC as Kajal Madam informed. IVSC or International Valuation Standard Council that is responsible for publication of the IVS, and that IVSC International Valuation Standard Council is comprising of four boards. So a board number one, that is actually for a business valuation, for a business and business interest valuation. The second is for a tangible asset, so like property, plant, equipment, infrastructure, and all. And a third bond is for a financial instrument. So financial instrument will include a variety of instrument like shares, debenture, bond, financial derivative, like option contract, future contract, forward contract, swap contract. So all that will be part of the future financial instrument. And overall supervision is through standard review board. So that is actually board number four. So IVSC, that is comprising of four boards: Business Valuation Board, Tangible Asset Board, Financial Instrument Board, and Standard Review Board. So you will appreciate that what experience, what inputs they are bringing into framing of this international valuation standard. Now, as Kajal Madam informed, this IVS, International Valuation Standard, these are principle-based valuation standard. These are not a rule-based valuation standard. So before we go into the subject, very important to understand what is meant by principle-based valuation standard. So that refer to set of guideline or principle that will govern the process of valuing asset or businesses or a financial instrument on a global basis, on a global scale. So, as we all are aware, international valuation standards are adopted or recognized in majorities of the countries in the world. In India, we have IVSC. we have actually ICAI valuation standard 2018. So that is published by the Institute of Charter Accountant of India, but that is mainly adopted in India only, and that too not all the RVO, that is registered valuer organization. Majority of the RVOs, as we all are aware, there are 15 RVO, 15 RVO, which are recognized in India today, out of which majority follow the international valuation standard. But there are few RVO like ICAI RVO, Institute of Chartered Accountant of India RVO. They go by the ICAI valuation standard 2018. So mainly ICAI valuation standard. These are also based on IVS, as is the case in case of INDES. So we all know INDES or Indian Accounting Standard. These are based on IFRS, International Financial Reporting Standard. So in a same manner, this ICAI evaluation standard, these are also based on IVS or International Valuation Standard. So IVS, that is set of guideline or a principle, merely guideline or principle that will govern the process of valuing asset, business or business instrument or financial instrument on a global scale. And these are designed to provide a framework for consistent and reliable valuation practices. So unless we have some guideline, some standards, we may not follow the consistent and reliable practices. Like we have auditing standard, we have financial reporting standard. So in same manner, we have the valuation standard, and it is very important to follow or comply with the framework for a consistent and reliable valuation practices. And the emphasis in IVS, that is on professional judgment and discretion. Professional judgment of the valuer. So that will become subjective. You will appreciate that when we are talking about the professional judgment. So each valuer, each registered valuer, each professional will have its own professional judgment based on the experience, based on the skill set which is acquired by the valuer over a period of time. So, professional judgment actually will require us to update ourselves on a regular basis, because you will appreciate that the field of valuation, the field of insolvency, these are very wide coverage, and unless we update ourselves with the current event, means updatation of knowledge, that is very much necessary. And in that context, actually, as we all are aware, Divya Jyoti Valuation Foundation, they regularly provide us the opportunity by arranging this type of CEP, and that will actually give us opportunity to share our knowledge with each other to upgrade ourselves. So professional judgment and discretion, allowing valuer to adapt their method to suit the unique characteristic of each valuation assignment. Each valuation assignment, as we natural person, we human being are different. So no two human being we will find similar.
Hello.
Uh, any questions? So it seems it was by mistake. My sincere request to all the participants, please mute whenever you are not talking. If you have any query, you can unmute anytime. What we were talking, actually, each assignment is different, as we natural person are different. Even brothers and sisters, we may find this similarity. So same way, actually, each evaluation assignment is different, and we cannot generalize that. So that means unique characteristics of each evaluation assignment. And principle based standard will prioritize transparency, objectivity, and integrity. That is what is expected from us as a professional, the transparency, objectivity, and integrity. And adherence to principle based IVS, that is important for a stakeholder. as investor, regulators, and financial institution that will help to ensure a reliability and comparability of valuation result. So that is principle based valuation standard. And what is the difference between principle based and a rule based valuation standard? So rule based valuation standard, if we take one or two example, when you are doing valuation under IBC, necessarily you need to follow the guidance which is provided under IBPI regulation, whether that is CIRP regulation or whether that is liquidation process regulation or any other regulation. Likewise, when you actually are doing valuation for the taxation purpose, so necessarily you need to follow the guidance provided under the Income Tax Act, most particularly Rule 11 UA of the Income Tax Act. So that is actually a statutory provision, a regulatory provision, and you cannot ignore that because that is law of the land. So that is actually the difference between a principle based and a rule based valuation standard. So rule based valuation standard that will provide a specific procedure and rule to follow in every situation. So you cannot use your professional judgment when you are going by the rule based valuation standard, and that will offer less flexibility for a valuation professional to exercise the judgment, and that is more a prescriptive in nature. So when we feel sick, we go to doctor, and doctor will prescribe certain medicines to us. So we have no other alternative but to follow that prescription, take medicine as prescribed. So when we are following the rule based valuation standard, so that is a prescriptive in nature. So whatever is prescribed, we have no other alternative to follow that, and often used in regularly regulatory environment where strict compliance is required, and that can lead to standardized approaches. Once it is rule based, that will be standardized approach, and that may not always be suitable for complex valuation assignment. Like you are doing valuation of say embedded security, so that actually valuation of we take one example like valuation of ESOP, employee stock option plan. So supposing that is offered by a private company, so that will first require a valuation of the equity shares of the private company. You will appreciate that that is most challenging, and then we need to do the valuation of options. Options also, you will appreciate that is a challenging valuation of that. So if we go by rule based valuation standard, that will not give full justice to the complex valuation assignment, for example ESOP valuation. So therefore the principle based valuation standard, where the valuer will get flexibility to exercise his or her or its own judgment. And this rule based may lack adaptability to accommodate changing market condition and unique circumstances. As we all are aware, world is changing, and world is changing at a very fast pace. So in that, actually a continuous amendments to the standard that is need of the hour, and you will appreciate that actually amendments to the rule based standard, that will take its own time, because that is a statutory procedure, a regulatory procedure. So that actually changing market condition and unique circumstances, that may actually not be adapted in rule-based valuation standard, and that is commonly associated with national or regional regulatory bodies like Income Tax Act. So Income Tax Act is followed in India only, not in USA, not in other African country, Asian country, European country, but IVS is followed across the world. It has global recognition. So that will be followed in India, in European country, in Asian country, in African country. So a rule based will be limited to a particular jurisdiction, that will not have very wide coverage. So that is actually the difference between principle based and rule based valuation standard. I thought it proper to highlight this difference so that in our evaluation assignment, we have a clarity what is rule based and what is principle based evaluation standard. Now, this is actually the evaluation of general standard. As we all are aware, the IVS, International Evaluation Standard, these are divided into two part. We have the general standard and we have the asset specific standard. So as we all are aware, general standard is applicable to all types of assignment, whether we are doing valuation of land and building, plant and machinery, securities or financial asset, or whether we are doing valuation for the purpose of borrowing, for the purpose of acquisition, amalgamation of company, merger of company, financial reporting, taxation purpose, any purpose, general standard will be applicable. Whereas the asset standard, that will be applicable to the particular asset class like inventory valuation, intangible asset valuation, valuation of business and business interest, valuation of real property. So that will be asset specific, and general standard, that will be applicable to all types of assignment and for all purpose. So old general standard, which are applicable from 31st of January 2023. So as we all are aware, current version of the evaluation standard, that was published on 31st of January 2022, and compulsorily that has come into effect from 31st of January 2023. So in this current standard, we have the scope of work IVS 101, IVS 102 investigation and compliance, that is the process of due diligence. IVS 103 is on valuation report. IVS 104 is on basis of value and or a standard of value, and IVS 105 is on valuation approaches and methods. So as per existing version of the international valuation standard, we have these five general standard. Now a new general standard. So as I informed you, this has been published on 31st of January 2024. So actually just a few days back, end of previous month, this new version was published, and that will be made effective from 31st of January 2025. So a question will come, what in the interim period? So guidance provided is between 31st of January 2024 and 31st of January 2025, the valuer has two options. Valuer has two options. Either to adopt new general standard voluntarily or to follow the old general standard. So two options in this 1 year between 31st of January 2024 and 31st of January 2025. But effective from 31st of January 2025, the valuers have no other option but to follow the new general standard. So I hope that is clear. And if you refer to new general standard, you will find that actually the number of general standard that has been increased. So now actually we will have 7 general standard instead of 5 general standard earlier. So 2 general standard, these have been newly added, IVS 100 to IVS 106. Earlier that was IVS 101 to IVS 105. So IVS 100 is on evaluation framework, IVS 101 is on a scope of work, basis of value or standard of value, that is IVS 102, valuation approaches, that is IVS 103, IVS 104 data and inputs, IVS 105 is on evaluation model, and IVS 106 is on documentation and reporting. So many time actually when we get the evaluation assignment, we get confused from where to start and from where to end. So, if you think actually logically, now general standard, this has been arranged logically. So, if we follow these order in our evaluation assignment, that will actually give full justice to our assignment. So many time questions come whether first we should choose the valuation approach or valuation basis of value. Now we will get clear cut answer. Actually, there is no confusion. We need to follow these order. Earlier, as you can see, a scope of work is a fast reporting, evaluation reporting, which is prepared at the end of the assignment. So that is at 103. A basis of value, that is following the report. 105 approaches, that is following the report. So all that actually was not in proper order. But now general standards are actually arranged in such a manner that if we follow this order in our evaluation assignment, so we may give full justice to our work, our assignments. So first, we have to actually follow the guidance which is provided in evaluation framework, followed by scope of work. So scope of work, actually, as we all are aware, there are two documents which are very important. Number one, actually, the appointment letter issued by the client to the valuer, and number two, the engagement letter, which is issued by the registered valuer and accepted by the client. So, in that, actually, in these two documents, we will finalize the scope of work. So, once we finalize the scope of work, next step should be to finalize the basis of value or standard of value. As its name suggests, that is the base of valuation assignment. So those of you who are from land and building valuation asset class, so you will appreciate, or all of us will appreciate, the importance of foundation in a building. So if foundation structure is strong, entire building will get the strength. If foundation structure is weak, probably entire building will actually have a weakness. So, the same manner in any evaluation assignment, the correct selection, correct choosing of a valuation a basis or a basis of value or standard of value, that is very critical because that is the foundation of entire evaluation assignment, entire evaluation estimation. So if we have selected correct basis of value, our valuation estimation, that will be in order. So that is basis of value. We will learn more about that going forward in this session. And then valuation approaches. So as we all know, there are three approaches which are recognized globally: the market approach, income approach, and the cost approach. And this IVS 104 that is newly added, data and inputs. So what data and inputs we should take into consideration in evaluation, that is highlighted in IVS 104, followed by evaluation model. So valuation model, either we can have the automated valuation model or we can have the manual evaluation model. So as we all are aware, we are living in the era of automation. Each of our operational activity, each of our HR activity, each of our accounting activity, that is getting automated day by day. So why actually the field of valuation will be kept far behind? So in valuation also, now as we all are aware, many valuers, they make use of the automated valuation model. So earlier that was not recognized, but now it is recognized formally. Valuation model, whether that is manual evaluation model or whether that is automated evaluation model. So guidance on that is provided under IVS 105. And finally, documentation. Documentation is the key. Means To be on lighter side, please allow me. Actually, we always call to काम ना कर काम की चिंता कर और चिंता का जिक्र बार बार कर, so you will become successful. So in same manner, what you have done in your valuation assignment, document that, because ultimately at a later date, if valuation report is challenged, so what you had done, probably you will forget after 2 years, 3 years, because there is no timeline for challenging a valuation report. So whatever you do, even means you will feel that is not worthwhile. That step is not worthwhile, but make it a point to record that, because at a later date your records will come to your rescue. So documentation of very vital importance, and how to prepare the valuation report. So guidance on that is provided in IVS 106. My sincere request to each one of you, or sincere suggestion to each one of you, please make it a point to download the latest version or get the latest version of IVS. You will get many important information out of that. So if we talk about the valuation report, many times questions are asked, what is the format of valuation report? So there is no prescribed format of the valuation report. If you refer to international valuation standard or ICAI valuation standard or guidance provided in companies registered valuer and valuation rule or any other statutory document, any other standard, you will not get a format of the valuation report. So a question will come, how to prepare the valuation report. So what contents need to be incorporated in the valuation report? That guidance is provided in a company's registered valuer and valuation rule, more particularly the rule 8 of company's registered valuer and valuation rule, the ICAI valuation standard, the communication issued by the IBBI. As we all are aware, IBBI is the authority under the company's registered valuer and valuation rule. So we all get registration as per the provisions of the company's registered valuer and valuation rule. So IBBI, that is the authority under the valuation rules. So they have issued a detailed guidance, a detailed guideline, detailed communication on guideline on 1st of September 2020. So I hope you have already downloaded that. That is on use of caveat, limitations and disclaimer, CLD. So in that communication, in that detailed communication, they have also provided guidelines on what contents need to be incorporated in the evaluation report. Apart from that, in if you refer to old value means general standard IVS 103, very few contents were suggested which needs to be incorporated in the valuation report. But now in a revised standard IVS 106, the contents which needs to be incorporated, that list is now expanded and expanded to a great extent. So my sincere request, you can actually go through this guidance, which is of vital importance. And this is the structure of general standard. So IVS 104, 101 is on a scope of work. IVS 102, basis of value or standard of value. And IVS 102 is now having the appendix. So that is containing IVS defined basis of value. So as we all are aware, there are six IVS defined basis of value. Apart from that, other basis of value, which is two in number, and premise of value. So you all have heard about the highest and best use, existing use, orderly liquidation, forced liquidation. So in all, there are four premises of value which have been incorporated in this appendix. Now, 103 evaluation approaches, and under evaluation approaches, so as we discussed, there are three approaches to valuation, and under that evaluation approaches, under these three evaluation approaches, we have a valuation method. So that is now incorporated in an appendix. And as we all are aware, there are multiple methods of valuation under income approach, market approach, and the cost approach. So approaches to valuation, that is limited to three, but there are multiple methods of evaluation. So that is the IVS 103, and data and inputs. So that is 104, IVS 104, and appendix is on ESG consideration, environmental, social, and general consideration. So as we all are aware, we are living in the era of climate change, and sustainability that is given a very vital importance in all types of assignment, whether that is auditing, whether that is financial reporting, and now actually in a formal manner that is incorporated in the evaluation standard itself, IVS 104. You will appreciate that measurement or valuation of ESG consideration, that is very, very challenging. And a list given in this is a very wide coverage. So my again a sincere suggestion to each one of you, please go through this list. I have incorporated that in my PPT. We will go through that, but you gear up yourself to actually make a measurement of ESG consideration in your future valuation assignment, more particularly the valuation assignment which we will handle after 31st of January 2025. And 105, that is on valuation models. So that will be both automated and manual valuation model. And IVS 106, we discussed documentation and reporting. So that is the structure of general standard. Asset standard. So there is no change in asset standard. So IVS 200 on a business and business interest, a 210 on intangible asset, a 220 on non-financial liabilities, 230 on inventory. Only change in heading of IVS 300. So earlier that was plant and equipment, but now the scope of IVS 300 that is expanded. So now it is a plant, equipment, and infrastructure. So earlier we had actually some ambiguity about how to do valuation of infrastructure project like roads, bridges, and etc. But airports, railway station. So now actually that is clear on infrastructure. We can get guidance from IVS 300. IVS 400, real property interest. IVS 410, development property. And IVS 500, financial instrument. So financial instrument is completely rewritten, completely rewritten. So those of you who are from SFA asset class, my sincere suggestion to each one of you, please go through the revised guidance on evaluation of financial instrument, because in a previous asset standard, starting from IVS 200 and ending at IVS 410, amendments are there, but that are not, those amendments are not major amendment, but in IVS 500, that is completely revised, completely. Each and every word in IVS 500, that is rewritten. So actually completely newly drafted standard. That is how I have used a different color code here. So you can appreciate why I have actually made use of different color coding here. So please go through this IVS 500, particularly those of you who are from SFA evaluation class. Moving forward, so actually, at times, I will take just 1 minute. Please bear with me for a minute. So at times, actually, we do not get time to go through the entire valuation standard. So in that scenario, again, my suggestion to each one of you, even if we do not get time to go through the entire valuation standard, at least we need to go through the glossary. So glossary, which is incorporated in IVS at the beginning of the valuation standard. So that will provide us meaning of some important terminology. That will provide us the meaning of important terminology which is used in the evaluation standard. So as you can see, in all there are 41. Now there are 41 important terminology, meaning of which is provided in the evaluation standard. So at least go through that and you will get a fair idea. And here I have used the color coding. As you can see, there are a few terminology which is newly added. So newly added terminology are automated evaluation model. What is the meaning of automated valuation model? What is the meaning of data? What is the meaning of ESG? What is the meaning of input intangible asset liability? So all these are newly added terminology or glossary. Same way, there are a few which have been amended. So these are amended actually. Cost equitable, amended will include the asset, basis of value, kind, then intended user. So these are amended, and there is no change in some other terminology. So that will include the cost, equitable value, market value. So I have actually arranged this. I have highlighted this through the color coding. So you will easily make out which are amended, which are newly added, and in which there is no change. So that is about the glossary. And there are a few terminology which is deleted from IVS, deleted altogether from IVS. So that will include what is the meaning of fair market value, what is the meaning of fair value IFRS, may. Now everything is should, not may. May was giving an option to the valuer, and now actually compulsion in the form of sell. So as you can see, we have this should. I am sorry. We have a should actually, which is amended, and a may is now deleted. Then participant, purpose, subject or subject asset, valuation purpose or purpose of valuation, a valuation reviewer, weighting and worth. So all that, all these are actually now deleted from the IVS. Now actually for the benefit of all, I have actually incorporated, I have highlighted a newly added a glossary. So very important to understand the meaning of newly added terminology in the IVS. That will provide us a very important guidance. So what is the meaning of automated evaluation model or AVM? AVM use of that is increasing day by day in the era of artificial intelligence, in the era of machine learning, in the era of data analytics. So that is getting increased. So what is the meaning of AVM? So that is a type of model that will provide automated calculation for a specified asset at a specified date. Specified asset at a specified date, and calculation will be automated. So that will not be manual calculation. So using algo or other calculation technique, but without the valuer applying professional judgment over the model, including assessment, selection of input, and a review of the output. So that is the automated, the manual intervention that is getting reduced, that is getting reduced in the automated evaluation model. So very important to understand that. And there are many automated models which are available in the market today. Some are subscription based, and subscription is very costly affair. So unless we have actually sufficient assignment, we may not actually justify use of the automated evaluation model. So unless we have actually a cost benefit analysis, unless we undertake the cost benefit analysis, probably the use of automated valuation model, that may not be justified. So we have no other alternative but to use the manual evaluation model if we have the limited evaluation assignment. Data. So as we all are aware, in evaluation, we make use of both quantitative and qualitative factor. So that we were already doing. So now actually that is formalized. Data means both quantitative and qualitative information which is available to the valuer. ESG, very important in today's world. So that these are criteria that together establish the framework for assessment of the impact of sustainability. Sustainability has now become the buzzword. Every era, there are some buzzword which actually we come across practically every day in our life. So in today's era of climate change, sustainability is the keyword which we come across practically at least once in a day. So very important assessment of impact of sustainability and ethical practices, financial performance or operation of a company, a governance factor that is also getting importance now. What happened to Paytm? What happened to the Byju's? We all are aware. So if we don't follow the governance factors consideration, so that will ultimately give bad name to the country. So very important governance factor. Ethical practice, financial performance, or operation of a company, asset or a liability. And ESG comprise three pillars, as we all are aware: environmental, social, and governance. So all of which may collectively impact the performance, the wider markets and society, the wider markets and society. Input. So input will include data. What is the meaning of data given here? Data, assumptions, adjustment, which are determined to be relevant and assessed or select by the valuer to be used in the valuation based upon the professional judgment. Based on the professional judgment. Intangible asset, again a very very challenging assignment. As we all are aware, intangible asset, a majority of the intangible asset, these are off balance sheet item. Off balance sheet item. Why off balance sheet item? Because as per the guidance provided in the financial reporting standard, the internally generated intangible asset or homegrown intangible asset, that will not be reported in the financial statement. And going by the findings of a recent survey, around a two-third of the total value of intangible asset, two-third of the total value of intangible asset that is not reported in the financial statement globally. So you will appreciate what we see in balance sheet, whether that is a goodwill or any other intangible asset like patent, trademark, copyright, that may be one third of the total value of the intangible asset. So intangible, that is identifiable. So unless the intangible asset is identifiable, that will not be reported in the financial statement. So majority of the intangible asset which are internally generated like brand, goodwill and all, so that will not be identified, and that is the reason it is not reported in the financial statement. So an identifiable non-monetary asset with no physical substance. So because there is no physical substance, it is regarded as tangible asset. If any asset is having a physical substance, that will become tangible asset, that will no longer remain the intangible asset. So that is the meaning of intangible asset. Liability, what is liability? We know the meaning of that. So that is the present obligation. An obligation will require entity to transfer or otherwise provide economic benefit to other. So economic benefit is also provision of economic benefit, that is also part of the liability. So not necessarily monetary liability, monetary obligation. Observable data, very important. If you go through the latest version of the IVS, these usage of this terminology, observable data, that is at multiple places. So now actually importance is given on a valuation going by the observable data. So, what is valuation? If we summarize the valuation, so that is nothing but estimation. An estimation that will actually depend on certain assumption, certain presumption, professional judgment of the valuer. So, assumption and presumption that need to be based on certain data, and those data need to be observable. So very important, observable data. So information that is readily available to market participant about actual event or a transaction that are used in determining a value for the asset or a liability. So a readily available information to the market participant. On Friday, actually, as we all are aware, the share prices of Geo Finance, a newly incorporated a company of Reliance, that went up considerably. So that information, that is one of the example. I am using the practical because you will not forget that. So that is the information that is readily available to the market participant. That is one of the example of observable data. Very important, whatever assumption we make in a valuation, that needs to be based on the observable data. Information that is readily available to market participant about actual event or transaction that are used in a determination of the value of asset and or liability. So earlier, if you have referred to IVS, you will find only use of word asset. Now at all places, it is either asset and or liability, either asset and or liability. So that is the change actually. Professional judgment. Actually, we again come across these word very frequently. Time and again, we have been told make use of professional judgment, but what is the meaning of professional judgment? Nowhere that was specified in a formal manner. So that is now actually a newly added a glossary. So professional judgment is nothing but use of accumulated knowledge. Accumulated knowledge. So unless we accumulate the knowledge, we may not be able to exercise our professional judgment. Very important to accumulate the knowledge, and this type of COP. CPE program will give us the opportunity to accumulate the knowledge. So accumulated knowledge and experience, as well as a critical reasoning to make an informed decision. You will appreciate that accumulation of knowledge and experience that will not come overnight. That will take its own time. So very important to update ourselves from time to time. Accumulated knowledge and experience, as well as critical reasoning, which is very much needed. Unless we have reasoning power, we may probably not able to give full justice to our assignment. So accumulation of knowledge, experience, and critical reasoning power that will give us acumen to exercise the professional judgment. Professional skepticism, and again, a very important. So that is an attitude that include questioning mind and critical asset of valuation evidence. So again, actually, our whatever estimate we arrive at, that will be based on evidence. So evidence, whatever document, information, whatever data, detail we come across, we need to apply the questioning mind, and we need to assess that critically. Very important. Questioning mind and a critical assessment. Service organization, now it is actually in a formal way highlighted at many places where you may engage a service organization, because the field of valuation that is very wide, and probably individual valuer, he may not be capable to have actually accomplish all type of assignment. So for actually part of his assignment, he can take services of a service organization. So what is the meaning of service organization? So that is entity or a segment of an entity that provides the information, reports or opinion, including but not limited to providing market data, credit rating or other service support the evaluation. So supposing actually you are doing valuation of a business enterprise by market approach. So in market approach, you will need information about the comparable company, about the multiples of the comparable company. So that data we may not have readily available. So there are actually organizations which provide data. So you can very well now take the services. Earlier also we were taking, it is not that we were not taking, but what is the meaning of service organization, that is now added to the glossary in IVS. Valuation model. So we talked about the automated valuation model. Now this is a manual in a way. So that is quantitative implementation of a model. You must have heard about the financial model. So financial model we developed in a financial model we developed in Excel, mainly in Excel, and it is said that no commercial transaction, no commercial decision is successful without a use of a financial model. So very important to make use of financial model in our valuation assignment. So that is nothing but quantitative implementation of a method in whole or part that will convert input into output. So number one, this will take care of only quantitative detail. This will not take care of qualitative detail, and that will convert input into output, which is used in development of a value. So apart from what we actually output we get in valuation model, we need to apply the qualitative factor in order to develop a value. Valuation process review. As we all are aware, there are two types of assignment, mainly two types of assignment. Number one, it is detailed evaluation estimation, and number two, it is a review assignment. Review assignment. So what is the evaluation process review and what is the meaning of value review? value review and evaluation process review. That will come under valuation review assignment. And what is the meaning of valuation review? So that is either a valuation process review or a value review. So you need to go through that. And time and again, we come in this terminology, come across this terminology, valuation risk. So what is valuation risk? So that is nothing but possibility that value is not appropriate for its intended use. So supposing use is liquidation value, and supposing a use is for liquidation to arrive at liquidation value, and supposing if we are arriving at market value, so market value is for transfer of asset, liquidation value is when company is undergoing the winding up process. These two are different, so very important to understand actually. That will create the valuation risk. So in any type of valuation assignment, very important to understand the valuation risk. So that is about the evaluation risk. Now, actually, this newly added terminology, we covered that, and these are important. Apart from that, there are other terminology which is newly added. So, again, my suggestion, please go through the remaining newly added glossary. Now, IVS framework. So, as we all are aware, consisting of two type of standard: general standard, asset standard. As we discussed, general standard will provide requirements that are applicable across all classes: plant and machinery, land and building, SFA of asset and liability. So that is general standard. Asset standard will provide additional requirement. So requirement which is given in a general standard, apart from that additional requirement that we will get from asset standard for specific assets and liability. An appendix, so we reviewed that, that will provide additional information and requirement. So not only information, but the requirement also that will be provided in appendix for certain concepts articulated in a various chapter. So that which are the chapters, we have gone through that details also. Now we will start with the general standard, and now we will go quickly because we have to cover a lot more. But whenever you feel you have a certain question, you can interrupt me anytime and ask your question either through chat box or by unmuting yourself. So sorry, a general standard. We will actually review that one by one. So valuation framework. So earlier it was IVS framework, International Valuation Standard Framework. Now actually that is in the form of IVS 100, a newly added general standard, and the heading or title of that is also changed to a valuation framework. So instead of IVS framework earlier, now that has become a valuation framework. So a framework is consisting of a valuation principle. Valuation principle. So in a current version of IVS, you need to refer to core principles of valuation. So in the beginning of IVS current version, you will find the core principles of valuation. So that has now become section 10 in IVS 100, and that is now renamed as a valuer a principle. Valuation process quality review. So this is newly added. Now we may not be able to cover everything in this 2 hour session. You will appreciate even if we have 2 day program on IVS, probably we will feel this is not sufficient. So 2 hour we cannot have a complete view. So evaluation process quality review, very important. Each of our assignment we need to follow the quality process quality. So that is newly added. Then a use of specialist or a service organization. So we were making use of specialist and service organization even today, but that is not in formal manner. We were not getting guidance on that in formal manner. Now this is newly added in evaluation framework, how to make use of a specialist or a service organization. So if I give one example, inventory valuation, which is very critical. First thing we need to understand what inventory is reported in the financial statement. That is totally different as compared to what valuer estimate the value of inventory. So inventory that will be of different types like liquid cargo inventory, dry cargo inventory, container cargo inventory. So there will be bulk cargo inventory. So there will be various types of inventory. And as per the view of IBBI, that is authority, the valuation of inventory is in the domain of SFA valuer, in the domain of SFA valuer. So SFA valuer, he may not be competent to actually get the valuation, to accomplish the valuation of all types of inventory. Like I am from petroleum sector. So I know how challenging it is to make a measurement of a liquid cargo inventory, like petroleum product, like crude oil, like petrochemical. So that is very, very challenging. And actually, SFA valuer may not be competent. It may happen that we may not have come across actually a storage tank. We may not have actually witnessed how actually product is stored in a storage tank. A crude oil storage tank, you will be surprised if you go inside, that will be just like a football ground. So that will be actually such a wide will be the storage tank for a crude oil. Now you will appreciate that SFA valuer may not be competent to actually measure the inventory which is part of that particular storage tank, because we need to take many factor into consideration. So in that actually the use of a specialist or service organization, that will be very vital, and guidance on that is now coming in a newly added a section in IVS 100, that is use of specialist and service organization. Compliance. So that is actually IVS framework departures. So that is now renamed as compliance and effective date of valuation. So for that we need to refer introduction section. What is the effective date? What is the effective date? So just give me a minute. So for your convenience, what I have done, I have prepared a summary of each of these general standard, where I have highlighted where you need to refer through the existing valuation standard, which are the newly added, so that you will get a clear idea about that. Now, apart from that, what I have done, I have taken some important paragraph which I feel need actually need a better understanding. So, evaluation process quality control. So, what is the meaning of valuation process quality control? My sincere request: you need to have documents on what type of valuation process quality control standards you are maintaining in your firm. So at least have a certain documentation on that. So what is the meaning of that? So that is provided here. There must be valuation process quality control around the evaluation process, and control will help to ensure that valuations are performed objectively, transparently, without bias, and in compliance of with the IVS. Objectively, transparently, without bias, and in compliance of IVS. So, extent of the control that need to be determined having a regard to the intended use, intended user, asset, and or liability being valued, and the complexity of the valuation. So that is not generalized which type of quality control valuation process, quality control standard you are following. So that will be based on ground reality of each assignment. So that is very important. And control need to assess the judgments made during the valuation, including reasonableness and freedom from bias in determining the value, and control need to be documented. Again, a very important. तू काम न कर, काम की चिंता कर, पर चिंता का जिक्र बार बार कर. So that actually whatever control you have followed, that needs to be documented, and documentation need to contain sufficient detail to allow another valuer. So going forward, actually a review will become more frequent. So another valuer, whoever is appointed by the authority or by the RVO, he need to have, based on the documentation maintained, actually that need to allow another valuer applying professional judgment to understand the effectiveness of the control. So some type of document you need to maintain, so that when a review is taking place of the valuation report which have been issued by you, so now in a formal manner, because you are claiming that your valuation reports are IVS compliant. So once it is IVS compliant, you need to have this documentation. So there should be periodic assessment of the control. So that also you need to, periodic assessment can be annual, can be at a gap of 5 year, gap of 2 year, quarterly, half yearly, based on the volume, whatever periodicity you elect, but that needs to be periodic assessment, and their integrity and completeness are appropriate as of the valuation date. And periodic assessment need to be documented. Periodic assessment. Everywhere now you will find they have stressed the need of documentation. So documents are vital. So assessment need to be documented. And if valuer is able to address the valuation risk, what is valuation risk? Meaning of that is provided in glossary. So they may then perform monitoring procedure with respect to their own compliance and control policies and procedure. So go through this newly added guidance. Valuer, if the valuer does not possess the necessary technical skill, so if you do not have necessary technical skill or experience, data or knowledge, so perform all aspect of evaluation. So that is acceptable for the valuer to seek assistance from a specialist or service organization, providing this is agreed and disclosed. Provided this is agreed and disclosed, that is of vital importance. So, as we told, para 30 or section 30, that is newly added, use of specialist or service organization. So, I gave you one example of inventory valuation. Another example is supposing land and building valuer is getting assignment for valuation of a hotel building. Hotel building having 250 rooms. So you will appreciate that is a very big property, and that property may have a certain furniture, fixtures, electrical appliances, electronic appliances, certain paintings. So land and building valuer may not be capable of doing valuation of all types of asset which are part of that big commercial property of hotel. So in that, actually a valuer can take the assistance of a specialist or service organization, but the condition is that this is agreed and disclosed. Agreed and disclosed with the client, agreed with the client and disclosed in the engagement letter, in the appointment letter. So unless that is done, probably your work will be incomplete of taking assistance from specialist or service organization. And prior to using a specialist or service organization, valuer must assess and document the knowledge, skills, and ability of the specialist or service organization. And relevant factor will include but not limited to. So, what actually documentation is required? So, documentation with reference to the experience of the specialist or service organization, professional certification, license, or professional accreditation of the specialist or service organization, reputation and standing of the specialist or service organization. So that is about use of specialist and a service organization. Next in line is scope of work. So scope of work earlier also it was there. So section 10 or para 10 of IVS 101. So that is now revised. So that is now revised. Go through this revised guidance. Valuation requirement. So that is now revised. And old title was general requirement, but now that is renamed as valuation requirement. And valuation process review and valuation review requirement. So that is now revised. Old title was changes to scope of work. From changes to scope of work, now that has been revised to valuation process review and value a review requirement. Valuation a value. So this is the coverage of IBS 102 basis of value. So from 101 now we have come to 102 basis of value. As I informed, this is very important. Second step in evaluation, once we actually complete the finalize the scope of work, next in line is basis of value or standard of a value, basis of value or standard of value. So just give me a minute. I will be back in just 1 minute. Sorry, that was unavoidable. So a basis of value or standard of value. So a paragraph 10 introduction that is now revised. So please go through the revised guidance. Basis of value that is also revised. Entity specific factor. What entity specific factor we need to consider in each of the valuation estimation assignment, that actually earlier that was section 180 of IVS 104. Now that is para 30 of IVS 102. Synergies. So refer section IVS 190 of the erstwhile IVS 104. Now actually that is para 40. So likewise assumption, spatial assumption, very important to understand that what is the meaning of assumption, what is the meaning of spatial assumption. So that we need to understand there are two types of assumption which we are making use of, merely assumption and a spatial assumption. A transaction cost, allocation of value. So I have actually highlighted old, which old para you need to refer in this. Then you have the appendix. So IBS defined basis of value. So we have six basis of value: market value, market trend, equitable value, investment value, synergistic value, and the liquidation value. Everywhere you will find a value, 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 a value, but meaning of these value are quite different. You need to understand the peculiarity of each of these terminology, because that will provide you the competence to arrive at the correct evaluation, correct evaluation, or actually valuation which is in order. Very important in any type of assignment. Then we have the other basis of value. So earlier, as you all are aware, apart from fair value as per IFRS, that is International Financial Reporting Standard, and a fair value legal statutory, other basis of value were also incorporated, like fair market value as per OECD, that is Organization of Economic Cooperation and Development, or the fair market value as per US IRS. IRS stands for International, oh sorry, IRS stands for Internal Revenue Service. So in USA, it is Internal Revenue Service. In India, we call that as Income Tax Department. So US IRS had also provided the meaning of fair market value, which was part of IVS 104 earlier. Same way, Organization of Economic Cooperation and Development, they had also provided the meaning of fair market value, which was part of IVS 104. But that is now removed. That is now removed. So now actually, apart from six bases of value which have been incorporated and defined in the IVS, we have other bases of value limited to two only. And these are the IVS defined premise of value: highest and best use, current use or existing use, orderly liquidation, and forced sale. So these are the bases of value. These are the bases of value. So what is the basis of value? Now we have limited time, so we will not go into a detail of that. And moving forward, what is the premise of value? And these are the actually, as we discussed, IVS defined basis of value or standard of value. And what is the meaning of assumption? So that I have provided here. And what is the meaning of assumption and a special assumption? So that I have provided. If time permits, we will come here again. Otherwise, we will leave that. And now we will move to the IVS 103, which is valuation approaches. So very important valuation approaches. There are three approaches which are globally recognized, as we all are aware. Market approach. So that is also known as a relative approach of valuation. Relative approach of valuation, or the multiples and comparables, multiples and comparables, or market approach, or a relative approach of approach of valuation. Same way, we have the income approach of valuation, which we know as absolute approach of valuation, and that is also known as a present value approach of valuation, and a cost approach. So we call that as a asset approach of valuation, asset approach of valuation. So whether we do valuation in India, in USA, in any of the African country, any of the Asian country, any of the European country, we ultimately valuer or appraiser will do valuation going by these three approaches to valuation, globally recognized. There is no fourth approach to valuation. And you will actually understand these are based on the fundamental economic principle, which we learned during our school days or our professional journey. So nothing new. Valuation is nothing new. So if we understand that, so if I have incorporated here, so it is not there. So time is less, but market approach is nothing but a theory of price equilibrium, the fundamental economic principle of price equilibrium. So market approach is based on the theory of price equilibrium or the fundamental economic principle of price equilibrium. Now, what is price equilibrium? We all understand that time is less, otherwise we would have revised that. What is cost approach? That is the fundamental economic principle of substitution, the theory of substitution. What is income approach? That is ability to provide the future economic benefit, ability to generate the future economic benefit. So these are the three fundamental economic principle based on which market approach and income approach are based. And we have this market approach method, income approach method, cost approach method. So that is actually provided in the appendix. And section 80 of erstwhile IVS 105 that has been incorporated in appendix now, and section 90 has been deleted. And this chapter, which was previously IVS 105 valuation approaches and method, that has been moved and renamed as IVS 103 valuation approaches. So for the convenience, I have highlighted the difference between current version and the old version. So IVS 104 data and inputs. So as we all are aware, this chapter is newly added chapter. In current version, it is not there. So again, my sincere suggestion to each one of you, please at least go through this because you will get a guidance that is newly added. So a paragraph 10 is on introduction. Paragraph 20 is use of specialist or service organization. Paragraph 30 is on characteristics of relevant data. Paragraph 40, input selection. Paragraph 50, data and input documentation. And appendix is on ESG consideration. ESG consideration, newly incorporated paragraph. So newly incorporated paragraph. So what type of ESG consideration, environmental, social, and governance consideration, we need to consider in our evaluation assignment. So that is now part of your IVS, International Evaluation Standard. So if we refer to that, so ESG consideration, valuer should aware of relevant legislation. So each state may have a different legislation, at least with reference to the environment. So that is very important. A valuer should aware of relevant legislation and framework in relation to environmental, social, and governance factor which will impact a evaluation. So a pollution control measures in each state that will be a different. Pollution control measures in each state that will be a different. So valuer need to aware of relevant legislation and framework in relation to the environmental, social, and governance factor, which can impact the evaluation. An impact of significant ESG factor that need to be considered in a determination of the value of a company, asset, or a liability. An ESG factor may impact evaluation both from a qualitative and a quantitative perspective. So both factor we need to take into consideration, quantitative and qualitative. So it is not limited just to the quantitative factor, that may also require consideration of qualitative factor. So very important to understand that, and may pose a risk or opportunity that need to be considered. Risk and opportunity that need to be considered. So here this note is very important because once we go through the ESG consideration, you will appreciate that that is having a very, very wide coverage. So in that reference, this note is very, very important. So note is ESG factor and ESG regulatory environment that need to be considered in valuation to the extent that they are measurable. So everything in ESG consideration may not be measurable. So we need to consider to the extent that are measurable and would be considered reasonable by the valuer applying the professional judgment. So it is left to the valuer to decide what is reasonable and what is measurable, going by the professional judgment of each of the valuer. So what type of ESG consideration? So these are the examples of environmental factor which we need to consider in valuation. And this is illustrative in nature. So this list is not exhaustive. Apart from that, there can be other environment factor also. So air and water pollution, biodiversity, climate change, clean water sanitation, carbon and other gas emission, deforestation, natural disaster, resource scarcity and efficiency, waste management. So whenever you are doing valuation of a private company, whenever you are doing valuation of equity shares of a private company, you need to consider all these factors in your valuation. At least you need to create document in what manner you have considered this ES environmental factor in your valuation estimation. So that is about the environmental factor. This is the list of social factor. Again, this is illustrative in nature, not exhaustive list. So community relation of the company with the neighboring community. Community relation, any conflict management technique of the company. Then customer satisfaction, data protection and privacy, a development of human capital, health and education, employee engagement, gender equality and racial equality, good health, well-being, human right, working condition, working environment. So all these factors we need to consider in evaluation. Same way, governance factor. This is again illustrative, not exhaustive. So audit committee structure, board diversity structure, bribery and corruption, corporate governance, donation, ESG reporting standard and regulatory costs, execution remuneration, institutional strength, management succession planning. Now actually many company may not have management succession planning, but valuer need to consider. So all this actually you will appreciate having very wide coverage, partnership, political lobbying, rule of law, transparency, whistleblower structure. So as far as possible, whatever possible, we need to consider in the valuation. And what we have not considered, what are the reason for that? We need to document that, because ultimately this note is very important. ESG factor and ESG regulatory environment need to be considered in valuation to the extent that they are measurable and would be considered reasonable by the valuer applying the professional judgment. So with that, as I can see, it is around 90 minutes from when we started. So two things. Number one, if convenient to each one of you, we will have a short break, because for health reason also it is always advisable have a walk after sitting at one place continuously. So we will have a short break, number one. Number two, before we go into break, any questions from your side on whatever we have covered, or any feedback what you expect from this session, so that in remaining time, whatever best input I can give to your expectation, I will do that. So either you can go through the chat box route, or you may unmute yourself. So Mr. Mangal Nigam, as I can see, you have raised your hand, sir. So any questions, sir? Sir, you have to unmute, sir. You have to unmute, sir. First, you have to unmute, sir. You are not audible, sir. In the meantime, may I request Vaisali madam, you have also raised your hand, madam.
Yes, the question is in the new provision of ESG, whether the data related to ESG is required in the IBC valuation of, say, liquidation or CIRP?
See, IBC regulation, if you refer to CIRP regulation or if you refer to liquidation process regulation or any other regulation, the guidance provided is you need to follow the IVS, International Valuation Standard. So that will be very much a part of those valuations also, madam.
Yes, but in case of that company which is closed or whether the business is closed, everything is
So
not
that
there.
you
Still,
need to have documentation for that, because in CIRP there may be cases where company is a going concern. So
okay.
that will become applicable. Hai na? It is
Yes,
not that each company under CIRP will not function as a going concern.
okay. Yes, thank
Because
you.
ultimately CIRP is what? Ownership transfer. Resolution of insolvency is through ownership transfer. So when we are talking about ownership transfer, it is expected that that company will come out of the financial distress.
Okay, thank you.
So any more questions? Need what are revision in a market approach? Okay. So market approach, nothing much, sir. Market approach is based on the comparables and the multiples. So actually a fundamental change will not be there, sir. So, fundamental principles of each of the approaches that will always remain same, sir. Methods are also same. There are no changes. Here and there are changes in use of certain words, sir. So that you need to go through. Once you actually go through the revised valuation standard, you will understand that, sir. So I hope I have given reply to your specific query. If you have further query, please inform, sir. Mangalingam, sir. Okay, sir. Okay. So it seems no further question from your side. So it is 11:35 now, and we will resume the session at around 11:43. 11:43, and in balance time, whatever best that we'll cover. Thank you for your attention throughout this session and making this interactive session. Thank you. So we will restart now, resume the session now. I hope each one of you have rejoined. And my sincere thanks to each one of you. Some of you have expressed your kind word and provided encouragement in the chat box. So we will go to my PPT where we left actually. So ESG consideration, we have covered that. And now what I feel, actually time is limited. So we will directly go to the this valuation model. We will come afterwards. We will go to the valuation report, which is very important. IVS 103 documentation and reporting. So that is very important. So paragraph 10 is on introduction. Paragraph 20 is on documentation, and 30 and 40 is valuation report and valuation review report. So these two type of assignment which we get as a valuer. So now actually these two type of reports are segregated. What is the content which we need to incorporate in the evaluation report, and what contents need to be valuation review report. These have been now clearly defined. So this entire portion is revised, and again my sincere suggestion to each one of you, please go through this revised guidance. Please go through this revised guidance. So as we discussed, there is no format of a valuation report, but what contains need to be incorporated in the valuation report, that is provided in the IVS. And a valuation report must convey the following at a minimum. So number one, it is mandatory, compulsory. Number one, these contain need to be compulsorily incorporated in any of the valuation report. And number two, these are the minimum requirement. So apart from that, actually these contain valuation report can have the additional content also, depending upon the ground reality of each case, So what contents are mandatory, compulsory. So agreed scope of the work, number one. Number two, asset and liabilities being valued. Number three, identity of the valuer. Number four, client. Number five, intended use. Number six, intended users if applicable. So very important, like IBBI evaluation. So who are the intended users of the valuation report in IBBI evaluation or IBC evaluation? So intended user, number one, either RP or a liquidator or a committee of creditor or bankers. So the all these stakeholder, what is agreed in the scope of work that need to be highlighted, the intended users of the evaluation, and very important actually, if you intend to know the importance of highlighting intended user, so you can go through the Kingfisher airline controversy. Valuation controversy, that is available on the internet. So you will understand the importance of incorporating the details of intended users in the valuation report. Now that is IVS requirement also. Then valuation currencies, normally in India that will be Indian rupee. But if some foreign company is involved in the task of valuation, then we need to highlight the valuation currency of that particular country. Then a valuation date, basis of value adopted, very important, what basis we have adopted, the evaluation approach adopted, market income or cost or multiple of that, then evaluation method or methods or evaluation model or models applied. So whether we have gone by the automated valuation model or any particular valuation method. So those details need to be highlighted in the evaluation report. Then sources and selection of significant data and input use. So from where we have obtained the data, very important to mention that whether we have got the documents from the client or whether we have got the details details or document from the public domain, from the internet. So very important to mention the sources and selection of significant data and input, significant ESG factor which are used and considered. ESG factor which are used and considered in the valuation, very important to mention about that. If consider, so means what are the significant ESG factor, and if not consider a reason of that to make it more elaborate, significant spatial assumptions and or a limiting condition. So that also need to be incorporated. Then findings of a specialist or service organization, wherever actually a specialist or service organization is engaged in the process of valuation, detail of that need to be incorporated in the valuation report. Then a value and a rationale for the value. So whatever estimate of value we have arrived at, we need to provide logic behind that, justification behind that, rationally behind that. So value and rationally for evaluation. And IVS compliance statement. You will appreciate that this is new development. Now we have to provide a certificate in the valuation report. I have complied with the guideline provided in the international evaluation standard. So that compliance certificate, compliance statement, that also now need to be incorporated in the evaluation report. And the date of the valuation report and evaluation date, that may be a different also. That can be a different also. So both these date, evaluation date and date of the valuation report, which may differ from the valuation date, that need to be incorporated in the evaluation report. So these are the contents of the valuation report, and these are the contents of the valuation review report. So wherever we are getting a review assignment, so what will be what content we need to incorporate in the evaluation review report. These are highlighted here. Again, this is a compulsory. These content must be incorporated, and again this is minimum. So this is the minimum requirement. Apart from that, we can have many more contained in the evaluation report. So agreed scope of the valuation review, number one, assets or liability review, identity of the evaluation reviewer, identity of the client, intended users if applicable, then a significant ESG factor which are used and considered. So very important apart from in the evaluation report. Now, if we have not considered, probably actually reviewer may say if our evaluation report, any of the evaluation report which is issued by us, and that is actually selected for review by another valuer. So he will certainly ask what ESG consideration you have incorporated in your evaluation estimation. So significant ESG factor used by the original valuer and considered by the original valuer, a detail of that need to be incorporated by the valuation reviewer now. So very important, we give due importance to the ESG consideration. And use of a specialist or a service organization if used as part of the valuation review. Procedure undertaken and documentation reviewed. Valuation reviewer's conclusion about the work under review, including supporting reasons and a subject of the review, date of valuation review report, and version of IVS that is applicable to the review. So which version? Either that is if effective from 31st of January 2023, or the IVS which is effective from 31st of January 2025, or any of the previous IVS version. Details of that need to be incorporated in the evaluation review report. Evaluation review report. So a very important. These are the contents of the evaluation report and the evaluation review report. And this valuation model. So this is newly added. This chapter is newly added chapter. So my request is you need to go through these paragraphs. That is introduction, use of a specialist or service organization, characteristics of appropriate valuation model selection and use, valuation model documentation. So that is a valuation model. I have provided this, so you may go through that, and valuation model documentation. So with that, actually, I will end here in this limited time of 2 hours. I tried my level best to give as much input as possible on this subject having very, very wide coverage. And now we have around 3 to 4 minutes. So in that, if you have any question, because it will be difficult to cover asset standard in the remaining time. So in this 3 to 4 hour which is left for this session, if you have any question on whatever we covered, so questions are welcome. Thank you for your kind word through the chat box message, and send the list of content in the valuation report. So, sir, what I will do, I will forward this PPT to the organizer of this event, and in turn you will get that. So that contents of valuation you will get in my PPT, sir. Thank you. Thank you.
Thank you, sir, for such a wonderful and interactive session. Hope everyone find it informative.
So, I express
Thank you,
my
everyone, for the
sincere thanks.
participation.
I express my sincere thanks to each one of you for your attention throughout this session, through your appreciation through these chat box messages, which will provide me the encouragement. And also thank to the organizer, Divya Jyoti Valuation Foundation, for giving me this opportunity.
Sir, one question. From where to download the IVS, new IVS?
A new IVS, actually, probably you may request the Divya Jyot Valuation Foundation. They will forward you.
Okay. Okay. Thank you.
Sir, we were going to share it.
Yeah. Madam, you make it a point to share a new version of IVS to each one of your member, or each one who have participated in this, so that will help them.
Is PPT and IVS.
Okay, sir. Sure.
Thank you.
Thank you.
So can we end now?
Thank you.
Thank you.
Thank you, sir.
Thank you, again, sir, for such a informative session. And thank you all the participants to be a nice audience. Thank you.